market also had a chance to look back at this strong earnings season, particularly with the record positive to negative guidance ratio. And there's, of course, still hope that stimulus happens, albeit less than $3, maybe even less than $2 trillion. Meanwhile, key resistance points have been taken out, and the all-time highs are not too far away. So where do we go from here, and how should you be positioned? For that, I want to welcome Zuma Global President Heather Zumaraga, along with the CEO of Surevest, a CI company, Rob Luna, and Macro Trends Advisor, founding partner Mitch Rochelle. Heather, let me start with you. We've got election chaos, COVID-19 cases surging, in fact, 121,000 just yesterday. So how impressed are you with this rally against that backdrop?
Right. We have a lot going on right now, yet it was the best week for the market since April, and it was followed by one of the worst weeks in the month. So there's a lot of volatility in the marketplace right now. One thing is clear, though, that if there is no blue wave, meaning that Democrats take control of both the House, Senate, and the presidency, they're less likely to pass those corporate tax increases, capital gains increases, which impact the stock market. And even you can look at tech and healthcare, which are doing very well. They're not going to break up big tech.
Right,
Regulation might be coming, but the market likes that. Divided Congress.
There's no doubt about that. And, you know, Rob, I think that, you know, again, you know, Heather's talking of preceding this. That was a really tough week. A lot of people thought, you know, maybe it's going to get bad from here. How quickly the markets rebound?
Yeah, no, I mean, it was a tremendous week. Well, we're up almost about 8% on the S&P. And we talked about this last week, Charles. I don't think it was the presidency, because Biden, which looks like he's probably going to be the president-elect, was leading in the polls a lot larger of a lead than we were expecting. The market was really worried about this blue sweep. That doesn't look like it's going to happen. So what was happening, all those winners that we saw, the Amazons, Googles, Facebooks, that got sold off because they were worried about a potential capital gains hike, now everybody's rolling right back into those names, and those are going to need to be the names that lead you right into next year.
All right, we're going to talk about those names, but I also want to bring up an important point, that boring can be very rewarding, right? Because it turns out, coming into today's session, it's materials that are the best performing sector since the March 23rd lows, and industrials are number 3. So, Mitch, here's the question. Can these sectors continue to outperform?
I think what happens often, Charles, is that the exciting stocks get unappealing and they sell off, and then they look for other things. We could have an infrastructure play. Certainly the construction industry, if you look at the jobs numbers today, were hot. And clearly we're going to, you know, Biden's had that whole Build Back Better message. So maybe we'll be manufacturing more stuff in the United States. So it makes sense that those names are starting to get a little love from investors.
Yeah, and one thing that's helping materials, also gold is on fire right now, silver, the dollar's getting weaker, Heather. You know, so there's some people think that goes hand in hand with a Democratic president. But it is really amazing, because it's not that tech has suffered, it's just how much material names are up. And a lot of people never talk about them, should they?
Yeah, like you said, boring may be hot right now, right? And the reason is, if you believe the next president-elect is Biden, then you can expect, I think, infrastructure spending to the tune of $1 to $2 trillion. That helps materials. That helps the industrials. All of that will come to fruition. And I think we get more stimulus from Congress as well. That feeds into the market. So you see everything doing well across the board, not just tech, but small caps are doing very well. Healthcare is doing well. And I think that bodes well for the market going into year end, for sure.
Now, of course, tech and communication services, of course, always have that sizzle, right? We got to admit that. I mean, they've carried the market for more than 2 years. In fact, Wedbush is saying, stay in these names. And Rob, I know you've been crushing it with tech, and I want to give you a shout out for Farfetch, FTCH. I think it's a symbol. You gave it to us 2-3 weeks ago. The stock is unstoppable. So kudos to you. Our viewers are making money. But you say stay in tech, don't you?
You have to, Charles. I mean, that's really what's leading. That's where the top line growth is going to continue to come from. And, you know, one thing that we've been talking to our clients about, you know, the new barbell, the new safety really is these cash hoarded companies, your Apples, your Facebooks that are sitting on hundreds of billions of dollars of cash, because we know interest rates aren't going anywhere anytime soon. And then you need to look for these undiscovered new tech leaders like Farfetch. You're right. Stock's up like 30% in the last 2 weeks. First of all, Alibaba said they want to get into the area, put $300 million, and now Richemont, who
Yeah.
owns Cartier, is putting another $700 million into the stock. You got to do your research and find these under-the-radar names.
Well, you did it again, and you're rocking again. Now, I want to ask about marijuana stocks, and I tried to get this in the show earlier in the week, and I couldn't. On my swing service, I put on ACB. We're up 48% on that idea in just a couple of days. And, Mitch, I think you think folks maybe should have exposure?
Well, and I also have two kids in college who are watching right now, so ignore what I'm about to say. But you know, there's one challenge with the weed stocks, which is from a federal perspective, there are expenses that they cannot deduct
Sure.
on their federal income tax return. So they do have a very, very high federal tax rate. So maybe there's a little bit of good news, even though a third of the country has legalized marijuana and there's certainly demand for the product. The fact of the matter is, if we don't raise corporate income tax rates, you know, the fact that they already have an effective 70% rate won't be so bad. But there are all the other plays in that space, which are the REITs, because they, you know, obviously they have to grow someplace. So there are some REIT plays that you may want to look at as well.
Okay, and Scott's Miracle-Gro is another name that I have been in part because of that, and it's taken off too. You know, now, Heather, the interesting thing is some of these sectors were really hot, and this is how the market works on hype. Didn't live up to the hype. They've come down. Some people have missed out on them. But I suspect if the market keeps going higher, you'll hear about the marijuana stocks again, the 3D printing stocks. Some of these names, these sectors that didn't live up to the hype initially could make comebacks.
No, I hear you. Look, I've never heard you guys make a conversation about marijuana stocks in the stock market more exciting. So I think, look, there are a lot of investors. There is a place to make money in this sector, and you rightfully pointed it out. At the end of the day, though, as long as COVID is a problem and cases are surging, as Rob pointed out, I think tech. Ultimately, I know it's high-flying names, right? Google, Facebook, Amazon, Netflix. But I think that's the place to be, fortunately or unfortunately, as long as COVID is an issue.
Right. Okay. So let me ask, I got a minute, and I want to get everyone in on this quite simply. Will we take out the highs of the year and have new highs before the end of 2020? Let me go back to you, Heather. Will we make new highs this year?
Yes, but we will also head lower. So if you're thinking, what does that mean? Expect a volatile market.
Rob?
I know you like brevity, so yes, Charles.
Mitch?
I think so. There's a chase for there's money on the sideline. There's a chase for yield, and 80% of the S&P 500 is yielding higher. Their stocks are yielding higher than the 10-year Treasury. So I think money's going to continue to come in for no other reason for the yield.
Heather was that person who took the multiple choice questions, and if there wasn't a D, all of the above, she put it in anyway.
A, B, C, D,
Heather,
so I'll be right no matter what.
Always be closing.
Thanks, Charles.
Have a great weekend.